the Trump trade deal, how high could stocks go if that actually happened? BHP, a climate change warrior, and my 3-step plan to get you rich. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, overnight the Dow went up, and the big story was US and Chinese trade negotiators are going to get together for a face-to-face in China, I think it is, next week.
Yeah, Peter, I think that's part of the explanation, and I think that's all positive. I think the other thing that's happening in the US at the moment is earnings season has got off okay.
Better than expected.
Better than expected. They like their optimists in the US, right? We're in a bull market. Expectations were quite low. We've seen some good results early on. They want to buy the market.
But isn't the trade deal hurting as much as they were predicting?
Yeah, I think it's a negative to take away, Peter. I take all this trade talk with a bit of a grain of salt, being the glass half empty
Salt's
guy.
very bad for you, Paul. Be very careful.
And I guess the market is also sort of a bit of tired of hearing about this stuff. But that's good news. I mean, but they do want to buy it, and I think if we can get the trade pushed to the sideline, then obviously that's going to be good for the market.
Yeah. Okay. Well, my bottom line is this: that I think if a trade deal was signed earlier than expected, we could see a 5% to a 10% rise in the stock market. Some part could take off. It could reduce the rise. Is that if there's no trade war, interest rates don't have to go much lower, and interest rate cuts have really helped the stock market. But I do believe the sense of relief would pump the market up about 5% at least.
Yeah, I'm not quite there
that's a surprise.
As seeing a jump like that. But I do think, as I said, I think they like buying the market.
Yeah.
They're bullish. This is a negative. Earnings is probably, I think,
trade was a negative.
Yeah, I think earnings. Well, I think earnings. Earnings is turning into being a positive, and so you get that. The market wants to rally, I think the trade's out there, but it's they're probably being a bit realistic about this and saying that there's a lot of twists and turns to come on this, Peter.
I think the bell ringer's got a bad wrist today. He doesn't know how to ring the bell apparently, but I ring it. There it goes. Oh, BHP. I can't believe this. A climate change warrior.
Well, Andrew Mackenzie's certainly turning out to be a climate change warrior. This is the announcement that BHP is going to spend $400 million, US million dollars. Well, it sounds huge on climate change initiatives, which includes particularly some investments, also looking at what can be done about so-called, grade 1 and grade 2 and grade 3 type carbon emissions. These are the emissions
which we all understand.
Which we all understand. I think there's another word, but it's something free. Yeah. Anyhow, look, I did a bit of research on this, Peter, this morning. I've gone to their website. Great PR announcement. There's a beautiful little 45-second video you can see from BHP headquarters.
Won't miss that.
It's $400 million US over 5 years.
Yeah. Call it 80 million a year.
That's about 80 million a year.
What's 80 million like to their turnover?
And that compares to their annual capital investment is about $8 billion US. So it's about 1% of capex.
Okay.
So let's not get too carried away about it. This, I think Mackenzie is a passionate believer in this stuff, right?
Better than nothing, he would
It's
say.
better than nothing, and I
more
think
Scottish. Better than nothing.
Well, and I think the big issue for companies like BHP and Rio is that so many investors now are becoming very concerned about the so-called ESG type issues. Yeah. And so, there are a number of major funds now saying we're not going to invest in industries that are creating, things that are used in carbon.
What's ESG stand for,
Well,
Paul?
environmental, social and governance type issues. So, so we've seen some big global sovereign funds come to the forefront and say, look, I'm sorry, we can't invest in these companies. This trend's building on itself. So BHP and Rio and the others in this industry, they face some challenges because if a lot of investors won't buy their stock, that means their cost of capital goes up. It becomes a lot harder to operate. So I think they have to do something, and this is what we're seeing. I think Mackenzie's a believer.
Yeah.
But I think this announcement's a little bit more for the PR machine. And look, it got what it got. ABC fell over the story this morning. Fairfax
ABC
is all over it. Yeah. So I'm not going to write about this, but look, have a look at their. As soon as I saw the 45-second video that BHP had made, I knew this was about the PR.
I'm going straight to that video once this is over. Now, look, my 3-step get-rich plan. Paul, what do you think of my
I don't know. What are the 3 steps, Peter?
Okay, right. So I've written this with link to my book. My book is called Join the Rich Club, and it's designed to help people get rich over time.
Okay, step one.
Step one is save. You've got to, and I often say, try and hit your lifestyle with a 10% GST. So if you're spending 50 grand a year and you cut your spending by 10%, there's $5,000.
So
Save it up.
GST expenses.
Yeah, okay. So first save. W is wait. Wait until the stock market crashes. Now, this is not advice for people who are already in the market. I hope one day we can actually work out before the stock market crashes. But for people who aren't already in it, I think it's a time.
So you're not portraying an imminent stock market crash?
No, I'm not. But I'm saying it gives you time. If it's 3 years before a crash, there's 3 years to save up your money. So you might have 15 grand in my example, 15 grand ready to go. But when the market crashes, that's when you get into the market. And if you read the book, or read the stuff I write on the website, you'll see what the product is, which I think you should invest in. That will.
So we're not giving away the third step today, is that right?
Not yet.
Not yet.
You've
got to buy a copy of Join the Rich Club, and I'll do the promo because he's no good at it.
Yeah,
which you can get at which you can get at switzerstores.com.au, switzerstores.com.au for the pricely sum of $24.95. I told you he was no good, right?
I just write it. I don't have to do anything else, but I tell you what, I shouldn't have the price, I guess. So that's us. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.